Well, let's get more on the domestic and I guess property market potentially here with the advisory, and have a look at how the government's lowered deposit scheme has had an effect. Glen Hare from Fox Hare Financial Advice joins me now. Glen, good to see you. I saw a report that nearly 2,000 more homes were purchased in October compared with October 2024 after the expansion of the federal government's 5% deposit guarantee. How are you seeing it play out in the market?
Yeah, so in terms of the scheme itself, so anyone that hasn't owned a property in Australia in the last 10 years or is able to access property and only putting 4 to 5% deposit. It's also worth noting the scheme does extend to single parents as well, enabling them to put forward a 2% deposit in order to secure their family home. In terms of the scheme itself, so there's depending on who you kind of listen to, economists are viewing this quite differently. The government suggests that over the next 6 years, the increase in house prices will be nominal at 0.5% over that 6 year period as a result of the scheme. Whereas if you look at analysts sitting within the Insurance Council of Australia, they're predicting a much higher increase of up to 10% in the first year alone. So it remains to be seen what the impact on house prices is, but the scheme is getting a little bit of heat.
Yeah, it certainly does seem to be. So just tell us from what you're telling clients, how you're sort of advising whether or not it is actually positive. We know people are trying to get into the market, but at the same time, it could be inflating prices as well.
Look, I think it's doing both. I think it is doing what it's intended to, enabling people to get into the property market faster. But it is also, as you rightly noted, because of that additional, I guess, demand or the additional ability for more Australians to potentially purchase. It is having that increase on property prices. And that's based on, increased demand, increased competition. But what I am mindful of is that if, as a borrower, you're going in with a lower deposit, so, utilizing the scheme, putting 4 to 5% deposit, at the end of the day, it does require you to then borrow more. Which then does lead to, higher repayments, and there is a risk of negative equity. So what I mean by that is purchasing a property for $500,000 today, but then the value of that property going down in the years to come, resulting in a loan which is therefore greater than the actual property value. So there's certainly risks associated with it, and however, if you are looking to secure your first home, then there's an argument to say that if you move forward with a 5% property now, if the market is anything to go by over the last 5 years, then going in with that high level of risk in the short term, if prices do continue to grow as they have, it may be a considered risk that you may need to take on.
What are some of the other ways that people can potentially get ahead here, Glen? We talk a lot about rent vesting as well.
Yeah, rent vesting is a concept where you buy, you rent where you want to live, and then you buy an investment property elsewhere. I am mindful that if you do go down that path, then that may or may not push back when you're inevitably able to purchase your first property, your first home rather. What I mean by that is if you go, oh, I can't afford, this particular area, I'm going to go buy an investment property for $500,000. If you then do that, the reality is your ability to then buy your own place is very much dependent on what that investment property does. If you buy a good asset and it grows in value, then there's an argument to say you could then in the years to come sell that, and affording you to buy your own place. But if you invest in a property that, doesn't perform as you would expect, it's a lower price point, potentially not a blue chip area, then that property may not perform as expected, and you may end up needing to sell that at a loss in the years to come. There are other government schemes that are worth considering. So the First Home Super Saver Scheme is one that doesn't get a lot of airtime. It's a terrible acronym, and there's a little bit of life admin involved, but it's a scheme where you can make concessional contributions to superannuation, claim those as a tax deduction, and then withdraw those funds in order to purchase your first home. So the advantage there is a very clear tax concession, and there's caps and certain considerations with regards to that scheme, but certainly another one worth looking into if you are looking to secure your first place.
And just more broadly, Glenn, going back to the relaxed government scheme, what are people in the industry, you know, at your level sort of saying? Are they more broadly positive about it, or are they concerned about some of those other points we mentioned about inflated prices?
Very mixed views, and I feel like we're seeing this across the board through our profession, through what we're hearing from government and external analysts. It is very mixed views, but it has given a lot of Australians, a little bit more hope that they are going to be able to secure their first home. However, what I always come back to is if we are going in with a lower deposit, that does mean that we are then going to be borrowing more in order to secure that property. We just need to be really comfortable that not only can we comfortably make those repayments on that current level of debt at current interest rates, and I'm mindful that obviously interest rates have come off quite significantly over the course of the last 12 months, but we also want to make sure that there's a little bit of buffer and a wriggle room there. So when interest rates do inevitably, go back up again in the years to come, I don't have a crystal ball on that. We just want to make sure that we're not putting ourselves in mortgage stress.